China's economy is getting wrecked thanks to bad loans. So to fix it, they want to issue more loans. Welcome to China Uncensored. I'm Chris Chappell. China's entire economy is stumbling thanks to a series of unfortunate events. A massive heat wave is drying up rivers and cutting off power. Authorities are still shutting down cities as part of their zero COVID policy. And if that wasn't bad enough, there's a lending crisis and massive protests. It's mostly thanks to a series of horrible policies and corruption in the real estate industry. Real estate is about 30% of China's GDP. See, developers in China kept selling apartment units before completing construction. They used the money from sales plus loans from banks and private investors to further expand business. Everyone assumed real estate prices and demand would keep going up until they didn't. It was essentially one big Ponzi scheme. Now developers are going bust after being deprived of easy credit. Prices are falling, homeowners are refusing to pay mortgages on unfinished homes, and the slump in properties being sold and construction is crippling local governments that rely on land sales for income. If you want to learn more in depth about the property crisis, check out our previous episode on it. The link is below. But making things even more complicated are China's asset management companies. You see, they were designed to buy bad loans from banks after the 1997 Asian financial crisis. But instead of fulfilling their mandate to clean up bad loans and fade away, they just became progressively more adventurous in their funding and structuring. In other words, the state-owned companies that were created to fix the original lending crisis ended up decades later contributing to a new crisis by making the very kinds of bad loans they were supposed to stop. And now they're seeing their profits tank on property losses. So how's the Chinese government responding to this new lending crisis? By issuing more loans, of course. More after the break. Welcome back. China's economy is in a mess thanks to bad loans. So China's regulators are encouraging banks to make even more loans to fix the economy. Galaxy brain move. Last week, China's State Council unveiled 19 policies worth $1 trillion, or about $150 billion. It's the latest of many spending programs. The latest 19 policies include extending about $44 billion in credit to 2 state-owned banks to finance infrastructure projects. Local governments have also been given permission to issue about $73 billion of special bonds. That's in addition to the more than $500 billion they were given permission to issue earlier this year. Of course, all of those bonds have to be used for infrastructure projects. State-owned power generation companies would also be allowed to sell $30 billion worth of bonds. And remember, bonds are basically just loans. So yes, loans upon loans upon loans. It's getting out of control. Of course, it's not surprising that the Chinese Communist Party is spending all this money on infrastructure projects. They're like the dad in My Big Fat Greek Wedding who thinks that Windex solves everything. Only instead of Windex, it's infrastructure projects. Need to grow your GDP? Infrastructure projects. Secretly colonizing Africa? Infrastructure projects. Too many young unmarried men? Why, infrastructure projects. According to Bloomberg, Beijing is making about $1 trillion worth of government funds available for construction projects. Total spending could be even higher than that, 3 times that amount by some estimates, once bank lending and corporate funds are added. To make these loans easier, China's central bank has cut interest rates, and large commercial banks have followed suit. Lower interest rates make lending cheaper, but the flip side is they also make China's inflation worse. Inflation is bad enough already, with China's currency worth less than it's been in 2 years. At any rate, The central government has issued policy directives and they expect them to be carried out. But a lot of the local banks in China don't really want to carry them out. Or they do, but they're having trouble thanks to challenges with operations, loss of investor confidence, and rising costs. Financiers have been reluctant to invest in projects that likely won't turn any sort of profit since they've already sold out. But China's central bank is having none of that. It's nagging commercial, rural, and even foreign banks with phone calls to get them to lend. Some of these banks are being told to ensure loan growth outpaces financial investments. They've even warned that if you do not lend, you can't invest. They're also warning banks not to sell Chinese currency. But, according to Reuters, some of China's state-backed financial institutions are pushing back on Beijing's calls to support the embattled property sector. Meanwhile, the central government is trying to make sure its plans are implemented by dispatching special task forces to supervise local authorities. But even if the stimulus goes as planned, many experts say these efforts fall short. Economists at Goldman Sachs say, barring major policy easing measures, we think overall economic growth will remain sluggish during the rest of this year. And according to investment bank Nomura, the measures aren't game changers. That's partially because the real estate market is still in deep trouble. On top of that, Chinese government entities could face a $900 billion funding shortfall this year. That's because local governments still have to fund the zero COVID policy, including mass testing and mass surveillance, without funds from the central government, all while getting far less revenue from selling land to developers. There's quite a lot of pessimism for how things will go in China. A leaked email from the founder of Huawei, a Chinese state-owned telecommunications company, warned of a very painful historical period and said to brace for survival. One thing that could be done to alleviate the pain would be to lift the zero COVID policy. Frequent COVID outbreaks, mass testing, and lockdowns are acting as a handbrake for the Chinese economy. But Chinese leader Xi Jinping won't back down from zero COVID. That's because authoritarians like him don't let economics take priority over political and ideological control, especially with the Chinese Communist Party's Congress coming up. There's no way he's going to admit zero COVID is stupid. And now, I'm going to answer a question from a member of the China Uncensored 50 Cent Army. Those are fans of the show who contribute through Patreon or Locals. Skip Davis asks on Patreon, so what happens when the Chi-Coms run out of water? They're probably going to take it from someone else, is my guess. They deplete everything around them without regard to the consequence. Hi, Skip. Good question. The Chinese Communist Party has been concerned about water shortages for a long time. In fact, one of the reasons they occupied Tibet in the 1950s is that Tibet is the original source of water for most of Asia. And Mao Zedong wanted it for hydroelectric power and probably also for the ability to control surrounding countries. China needs water not just for 1.4 billion people to drink, but also for growing crops and for hydroelectric power. So as the water situation gets worse, they're already starting to do things like limit the use of electricity in manufacturing. And like you suggested, Skip, China's use of water, especially for hydropower, is causing tensions with other countries. That's because the Chinese Communist Party is damming rivers that affect hundreds of millions of people outside China, like the Mekong River in Southeast Asia. They also have plans to build dams in Tibet that would divert water from the Brahmaputra River. That would have a huge effect on India and Bangladesh. Some say this could cause a water war between India and China. Thanks for your questions, Skip. And thank you to everyone who supports China Uncensored on Patreon. Our show is supported mainly by viewers. Visit patreon.com/China Uncensored to learn more. Or go to ChinaUncensored.locals.com for our exclusive social media platform. Once again, I'm Chris Chappell. Thanks for watching China Uncensored.